Welcome back to the channel. My name is Vandell, co-founder of Black Swan Capitalist. So today I was really compelled to make this video because there's a serious critical issue in the world right now, and one that hasn't really changed as of yet. And I wanted to talk about it and tell you how I feel about it and what I think is going to happen. So first of all, throughout history, so much has evolved, okay? Political powers shift, presidents change, politicians change, narratives change, world leaders, they come and go. And we move through these cultural debates historically, left versus right, red versus blue, Christian versus Muslim, black and white. And, promises are made, some work out, some don't, some are rooted in truth, some aren't. And at the end of the day, our focus constantly shifts from one crisis and one narrative to the next. And things sometimes do change for the better, or sometimes for the worse. It always changes. But behind all these issues and all these narratives, some things remain unchanged and constant till this day, and they're critical issues. So first, central banks, okay, they keep debasing the currency, and our money continues to lose buying power and value every single year. And that same $1 bill keeps buying us less and less every single year. This is the first critical issue, the money. Second, the wealth gap continues to widen, okay? As much as we've had so many changes in the world, that has not changed. People are working more hours, more jobs, yet still falling further behind financially. And even though they're technically getting paid more, or, it looks like you're getting richer on paper, you're not getting ahead. This financial struggle is really becoming common. And the truth is, just because it's common doesn't mean it's normal. And we're starting to see it normalize and become more common. The third point, wages aren't keeping up, okay? This is serious. It's affecting everybody in the world. Your income rises slowly, sure, over the years. Maybe you get a raise. But at the end of the day, your money loses value even faster than that raise, okay? So wages aren't keeping up, and that's because currency debasement. In essence, your wealth is literally being stolen silently right in front of you. So while the world basically argues over, headlines and, all kinds of issues, different narratives we focus on, and we get caught up with various headlines and the things that are changing, the truth is we're ignoring what hasn't changed. The most critical issue, and the real issue, is the money. It's always been about the money, okay? It's always been about the money and about control. And sure, as I said, some of the changes we're seeing and that do happen, might be good. Some are good. Some of the promises about the changes we should expect or that we're hearing will definitely be helpful in the short term if they do manifest and become a reality. But what hasn't changed is the money. And this is what we should focus on, and really that should concern us the most. Because one thing that affects everyone directly, your ability to survive, your ability to live, earn, save, invest, your ability to build wealth and live comfortably, and the ability to take care of your family, all depends on the money. And it still hasn't been fixed. And to be honest, you have to be honest with yourself. And the way I feel is it's not going to be fixed anytime soon. And that's the point. We need to pay attention to what's not changing, not the things that are changing constantly. because that's where the real problem lives, basically. It's in the money, and it affects us directly. And it's basically what impacts us the most, more than anything else, more than the cultural wars, and debates. So inflation, currency debasement, and devaluation. This is killing people's standard of living, and it has for decades. And it really began to accelerate after the US went off the gold standard in 1971. And the truth is, over the past 5 years, especially, just within the last 5 years, since 2020, that has significantly gone into overdrive. Okay? It's accelerated more than ever. And not just in the US, but globally. And the thing is, it happens so gradually, over time, slowly. So the effects aren't noticeable right away. And they're not that obvious until later, few years later. And that same trajectory, that path we're going on, is happening right now. I can see it in the patterns, in the macro factors. But first, we need to clear up some confusion around what these terms actually mean and basically establish a fundamental truth here so that it makes sense. Because there's huge misconception around devaluation, inflation, and currency debasement. And they're often interchangeably used, those terms, but they're pretty much a part of a broader sequence, and they happen in stages. So I'm going to explain that in this video. So in our economy, this plays out in stages like this. The central banks start currency devaluation, okay, deliberately devaluing the currency. Then inflation follows as a byproduct. And currency debasement, which we use that term a lot, is the final outcome. It's the final result that you get, okay? So basically, inflation is a result of currency devaluation, and then currency debasement is the final product. It's the end result. It's your money buying you less, okay? Now, we're actually watching this unfold in real time, right now, right in front of our eyes. So, if you want to make sense of what's happening right now in the world, geopolitically, economically, globally, and within the monetary system, where things are headed, and really how to protect yourself financially, protect your family, you need to understand currency devaluation and currency debasement on a fundamental level. Because the truth is, as pessimistic as it sounds, if you don't understand this stuff, you're going to face some serious financial challenges in the years ahead. So I'm going to break this down in simple terms and explain the relationship of how they're connected and what it means for you and your family and what I personally believe comes next. So we'll start off here. First, you need to understand that the value of money is constantly changing, okay? It's never stagnant. It's always changing over time. And how does it change over time? The value of money only goes down over time. And I'll explain this simply. Your currency steadily loses buying power over time, meaning it buys you less and less in the real world. Now, why is this important to understand? It's important because most people are actually taught to believe that when prices of, let's say, goods, cars, groceries, rent, services, when prices of those things go up, people are taught to think it's because those things are actually getting more expensive. But that's not the case. That's inaccurate. It's an inaccurate way to look at it, because you see, what's actually happening is the value of your money is declining and dying, meaning it buys you less over time, and in the real world you get less with that same amount of money you had. That's why you see prices higher. It's actually the value of your money declining. It's not the price of the item going up, even though that's what we see. And if you think for 1 second that your government will tell you ahead of time the truth about the monetary system collapsing in slow motion or a dying fiat currency, just think again. They will never tell you. In the 1920s in Germany actually faced a hyperinflation so extreme that people needed wheelbarrows of cash just to buy basic necessities and even buy bread. This is real. This actually happened. And yet, despite all that, the government and the central bank during that time assured the public that the currency was stable. They literally lied to their own people. So history shows us that they'll say anything to prevent panic and pretty much maintain control no matter how bad the situation is. This is a historical fact, and I don't see that changing at all. So we'll start with the first thing we need to establish is, this is my opinion, okay? In my opinion, this issue with the money and currency debasement isn't going to improve anytime soon. And I know a lot of people don't want to hear that, but it's better to know this so that you could do something about it. In fact, I think it's only going to get worse in the short term and will remain the core problem in our economy until something fundamentally breaks and hits the public out of surprise. And it will break at some point. Something will fundamentally break and people will react. Now, we just don't know when, but at the trajectory and the rate this is moving, it's inevitable. Because our financial system, our entire economic and monetary system was built to make money lose value over time. You have to understand, this Ponzi system that we live in is a debt-based system. So we operate on a debt-based system that strictly depends on constant money expansion of credit and money, okay? Constant money creation just to keep the system alive, the economy and the financial markets. It's like the economy is essentially on life support and it's always needing another injection to stay alive and to function, even though it shouldn't be functioning in this way. And this isn't some glitch in the system. The truth is, it's exactly how it was designed from the beginning. So even though the financial system technically died in 2008, the central banks have come up with very clever ways to keep this Ponzi system going until they can't. And they have a solution for that already. It's blockchain technology, digital assets, which is for another conversation. But even if there's a recession in the short term, a depression, or a major slowdown in global growth and GDP, which I think is happening and coming, central banks in the short term will still be forced to really stimulate economic activity through money printing and credit creation, okay? And they'll do this for as long as they can. And while it may be called stimulus or quantitative easing, which is an emergency measure they take, at the end of the day, it's still currency debasement and credit creation in one form or another. The outcome is the same. So that's the game, that's the classic playbook, and they will play it for as long as they can. Now, the system runs on debt, and the debt just demands more money creation, and they understand this. So this will keep going until it doesn't, but it will happen, it will break when we least expect it. So the dollar weakens as they create more money and you buy less. That's pretty much it. It erodes your wealth over time as they keep this debt system going. And that's not just inflation. That's currency debasement, okay? That's the final product, the final outcome. And it's pretty much baked into the system. And the truth is, as this cycle continues, which currently it is, the wealth gap only continues to grow. What that means is the middle class keeps shrinking because wages can't keep up with rising costs, and at the same time, the wealthy who own real assets, okay, whether it's digital or tangible, like stocks, real estate, companies, land, gold, businesses, and some digital assets, they continue to build more wealth in this debt-based system. And why is that? It's because when money loses value from currency debasement and credit being created in the system, assets gain value, okay? The rich understand this. The wealthy, the protected class, they get this. And that's pretty much why they buy assets and asset prices go up, okay? Because even though it's hard for the average person to build lasting wealth, because the lower class and the poor can't afford assets and typically they don't own assets, there's still a chance to get ahead. But the point is they're being squeezed out, okay, as this cycle continues. And this cycle isn't random. It's pretty much how the system was designed to work. And as they continue adding more currency units to the system, creating credit, asset prices will go up and the middle class will get squeezed out. Now, what is currency devaluation really? I'm going to explain it in simple terms. Currency devaluation is, first of all, it's very misunderstood because people like to look at it by measuring it against other currencies, okay? But by definition, currency devaluation is when a government deliberately reduces the value of its currency compared to other currencies. So the traditional way to actually measure the strength of a currency, and this is what most investors do, is they take the US dollar and they compare it to other currencies like, for example, the euro or the yen. And they compare them to one another. And that's how they measure it. Now, the thing is with that, that's when you see the dollar index, for example, or in the foreign exchange markets, that's what you'll be seeing. But here's the problem with that. If all major currencies are being devalued at the same time, which they are, thanks to global money printing and debt expansion and rising debt, then comparing all failing currencies together to one another doesn't really give you the full picture. And in other words, it's kind of like comparing one leaking boat to another leaking boat, okay? They're both still sinking at the same time, just at different speeds. So it's a horrible way to measure a currency, okay? Or the strength of your currency. But I'll tell you, the real way to accurately measure the currency's strength, okay, no matter what country you're in, is by asking yourself, what can this money actually buy me in the real world? That means looking at everyday essentials like food, gas, rent, other living costs, and especially assets, and saying, what can this buy me from those items or in the real world? That's how you really measure the strength of your currency, because that's what really matters, your purchasing power. At the end of the day, what can that buy you in the real world? So currency devaluation, simple terms, it means your money is losing purchasing power over time. What once basically bought a full cart of groceries for you, like a couple of years ago, now only gets you just a few bags, much more less groceries, that same dollar bill. So it's not simply prices rising, it's just your currency getting weaker. And the misconception many people have is that you need a crisis, an economic, financial crisis for this to happen. And the truth is you don't. Currency devaluation is built into the system. It's a feature of the system, and it happens gradually, very slowly every year, whether markets are stable or not. It's happening in real time, in slow motion. So crisis will sure expedite that process, okay? But it's still happening. And many assume that just because a dollar is still a dollar, its face value hasn't changed. They think the value of it hasn't changed. But a dollar is only as strong as what it can buy you. And that's the truth. And it's only getting weaker. So when the supply of money expands, when more currency units are created and pushed and pumped into the system, the value of each individual dollar or currency only declines over time. So think of it like watering down your juice, okay? If you keep adding water to the mix, essentially the juice gets weaker and weaker and you're diluting the currency. So it's the same concept, just with the money. Now, that's exactly what central banks, or why central banks create more money, because they have to debase the currency. We're in a debt-based system. There's no way to keep the system going without doing that. And it's just going to dilute the currency and hurt people that do not own assets. And this isn't speculation. It's systemic devaluation. And another major financial crisis is coming. That's inevitable. And I'll be breaking that down in a very detailed video coming up next. So subscribe if you want to hear that video or watch it. Now, this currency devaluation really accelerated extremely in 2020. So between 2020 and 2025, the US dollar alone lost approximately about 25% of its purchasing power in that short period. Now, just to put that into perspective, it basically means if you had $100,000 in 2020, that same $100,000 today in 2025 will only buy you 75 grand worth of goods, services, and real stuff and assets. So in other words, about a quarter of your money's real value in terms of buying power has disappeared in just 5 years. Now, this was because of currency devaluation from central banks, okay? And what you get is the product. It's basically currency debasement. So the way to think of this in modern context is currency debasement is just the end result of reckless money printing and monetary policy. That's pretty much it. So simply put, currency debasement is the final outcome of really crappy, prolonged currency devaluation from central banks. It always starts with the central banks. And another way to look at that, it's like pouring water into wine. It looks the same, but the strength is pretty much gone. And hopefully that makes more sense to people that are trying to understand this better. Now, this is the last point, and it's extremely important. Let's talk about inflation. So, from a basic fundamental level, many people think that inflation is the prices of things going up or down, but that's inaccurate as well. Inflation is actually the rate at which prices rise for goods and services over time. It's the rate that they rise. It's not the actual price of goods and services. Okay, a lot of people think it is, and that's not what inflation means by definition. In other words, inflation is basically just the symptom of currency devaluation. And what it is the rate at which prices rise for goods and services. And then, of course, the final product you get is currency debasement. And that's basically from the long-term damage of credit creation and money printing. But honestly, in my opinion, I'll go as far as to say that inflation and currency devaluation are essentially the same thing. And the reason I say that is because one causes the other, and both are actually built into the system by design. So they're essentially two sides to the same coin. But here's how the mainstream news misleads people, which is very important because you have to understand this to really understand what's going on. When the Fed or the mainstream media says that inflation is down, or the news reports inflation is at 2%, we hit our targets, most people think, okay, prices are coming down. But that's actually not the case. That's wrong. It just means that prices are still rising, just at a slower rate than before. Okay? It doesn't mean prices are not rising or they're significantly slowing down. So you're still losing purchasing power, just not as fast, but it's still happening. And with money, money is always growing and being added to the system. So at the end of the day, the result is the same. Currency debasement is the final outcome, and that's what affects you directly. So your money keeps losing purchasing power and eroding your wealth over time because of excessive money printing, credit creation, and pretty much rising deficits and policies that inflate asset prices while people's wages and savings don't keep up with that. And this creates that wealth gap there. And I don't see it ending anytime soon. Last important thing I have to mention is I understand we're in the middle of a global financial reset. It's happening in slow motion. That much is very clear. We've talked about this for many years. And a new system is currently being built, and some of the infrastructure is already there, behind the scenes. And the proof is there. But don't joke yourselves, because the truth is central banks and world leaders aren't in any rush to flip the switch, okay? They're going to squeeze everything they can out of this Ponzi current financial system we have before making that transition. And as I can see it by looking at the data and the charts, the patterns are playing out the same way. They're doing everything. They're increasing the money supply. They're going to cut rates. Now, how do we know that they're playing the same playbook? Because I'm seeing it. That's what they're doing. They raise the debt ceiling again, basically increasing their credit card limit. It's like a credit card limit. Now, why do you raise it? So you can keep spending. Common sense. That's credit creation, money printing, and spending. So even though it looks like they're cutting the budget, they're actually offsetting it somewhere else. So the illusion is going to go on a little bit longer. I believe the tools haven't changed. It's just a rebranding, okay? And the same names, just new tricks, okay? Now, eventually, or new names, but it's the same tricks. And eventually something will fundamentally break. That's inevitable. And the same people who created this mess will step in with their solution. They always make a killing cleaning up the mess they created anyway. And that's how it works. Problem, reaction, solution. And we've seen this cycle play out before. Not in our lifetime, but historically we have documentation of this. It's happened countless times throughout history, and we will see it again. But this time the solution will be different. It will come in the form of digital assets, blockchain technology, infrastructure, artificial intelligence, and they already have it prepared. They have for a long time. And not because the world is excited about it or the world needs it, it's because the system requires it. We're at a pivotal moment in history where the system is resetting, and it's not optional, okay? So the thing here is to position yourself to be in the best position to protect yourself and your finances during this transition we see. And when that moment comes, the utility behind certain digital assets, the protocols where the value lies in these blockchain technologies and infrastructures will finally be realized, okay? And that's when the value will start to move, and fast. And intrinsic value will reflect in their prices. But it will come with a cost. So for some people, it will be painful getting there. And for most people, I believe. And the thing is, this transition didn't start yesterday. This has been baking for a long time. And it's been in motion for many years before 2009. But 2009 really pushed things to the edge. And the shift from central banks becoming net sellers of gold to net buyers wasn't random. This was a strategic decision that had to be made for the new system. So they've been preparing for a long time. And meanwhile, we're still stuck here in the same debt-driven cycle, in this debt-based system, just on a global scale. It's not changing yet. And central banks are basically boxed into a corner. And they keep the machine running for as long as they can, and they have to keep expanding the money supply and the debt for as long as they can until they're ready for that shift. And it shows that it looks like it's coming very soon. So again, the wealth gap continues to get wider, and this isn't speculation. It's systemic currency debasement of currencies all over the world. And again, it's by design. And this is not going to change anytime soon. And we just need to be prepared properly and positioned correctly so that we could be on the right side of this wealth transfer. Because historically, politicians overpromise, some things happen, some things don't. You know, at the end of the day, empires fall, currencies collapse, economies collapse, not overnight, but in a step-by-step sequence. And until the final crack pretty much breaks. And that crack is coming soon. So, in other words, when it does, central banks will intervene, okay? But the fix will look different this time. And the introduction of new systems, digital rails, tokenized assets, programmable money, blockchain technology will be presented as a solution and the only way to move forward. And when that shift happens, those who've positioned themselves ahead of time and that are aware of what's going on will be on the right side of history, okay? And the right side of this monumental wealth transfer. And ultimately, you will have more choices in life and at least have a fighting chance. So there's a reason some hedge funds are labeled systemically important financial institutions. They see the writing on the wall, okay? They know what's coming. They're prepared. They have been preparing. And we need to be aware of what's coming as well, okay? Do not put your faith in anyone, in anything except yourself and God. And that's exactly what we should be doing now and taking action. But the truth is, we're living through the biggest wealth transfer that we will ever see in our lifetimes and the biggest wealth transfer in history. And it's not going to get any easier from here. And one day your kids and your grandchildren, if you have any, will be asking you, what did you do during this time, during this period? How did you position yourself? What were you doing? And it's going to be interesting because you're going to have to answer that question one day. So the question for you is, what will you tell them? How are you going to protect yourself and your future and your future generations? Because the decisions you make today, ladies and gentlemen, won't just shape your future, but they'll define your kids and your future generations. So if you'd like to speak with me one-on-one or with my brother, we do offer one-on-one consulting calls coaching sessions, please book a call with us. You can message me directly or go on our website, link in the description, and I'll speak with you all next time. Thank you.